Hi traders, good morning, good afternoon, good evening. Today we are definitely going to analyze Bank Nifty. That's what we do every week on multiple time frames. But today we will see how you can trade on Bank Nifty without using stop loss. There is a special strategy which I will show you with a setup where you can understand and learn that how you can hedge using your options to actually take a bullish position or a bearish position and still have a risk to reward defined in the system, and you can be assured that your stop loss will not be hit. So this strategy is very powerful, so watch the video till the end and do like the video. So here we are on a monthly chart of Bank Nifty. As you can see, the market has bounced after giving this indication. This was our setup, and from there the rally continues. Now till where the rally can go up to. So let's mark the next level where there are a lot of sellers available. So I'll show you today how to mark that level. See, you always see to the left and see, look out for a narrow range body candle, which is like a smaller body and bigger wicks. That will be your base candle. Okay, so here this is one candle which we can see, which is the closest of that. Okay, so this one, this body, smaller body and bigger wick candle. So this is our base. So this formation, if you see, this is actually a leg candle, a base candle and a leg candle. So this formation is called as rally and base and then drop. So either it can be rally base rally, rally base drop. Okay, two setups can form. There can also be drop base rally. There are multiple setups like that. But I will keep it very simple for you to understand that whenever you find a narrow range candle like this, which is in center, that will be your base, where there is a lot of indecisiveness in the market, where bulls and bears are fighting which direction to go. After this candle, bulls have lost the game and bears have won the game, and the market crashed from there. So you can see now there is a level at this level where there is a lot of selling which is available. So you should wait if you want to take a short entry to let the market come into this zone 30,968 to 32,366. So this is a zone where market can start falling from. So the moment you see a drop or a candle closing below this level, you should only think about shorting. And there are other various factors also which you need to see. You need to look out for a candle which can form here with the highest volume till date. If the volume like crosses above this, then you can expect that is a reversal of the market, and then you can definitely go short. That is on a monthly time frame. So let's look at this on a weekly time frame now. See, the levels drawn at a monthly time frame, they are so applicable on all time frames. So if you can see, this is clearly showing us that there is a lot of price was many times it has come into this zone. So you can see 1, 2. This was the all-time time high. So we will be able to see only 2 points where the market has come into this zone and then started falling. Second time it came into the zone, and then the crash happened, and then corona happened, so the market crashed. So now this is the third time which is which is there. So this looks like a head, shoulder, left shoulder, and this can be a right shoulder. So this can form a head and shoulder pattern here. So this is how you need to identify different patterns at different levels. Locations, patterns, and the candlestick patterns all are very important before choosing what direction the market is going to go. So you have to be very careful in choosing that. So now we have marked that this is our sell zone where the market can reverse. Now let's go to a daily time frame. So on a daily time frame, let's first analyze the overall trend. Okay, something very simple I'll show you. Can you guys see this super trend? Simple super trend. See where it has given you an entry. This has given you an entry here, and your stop loss will be super trend. Now just if you blindly follow this super trend also, how much money you would have made? You would have made a simple condition that if the candle closes below super trend, I will exit this trade. Simple rule. Okay, simple rule. You've taken an entry and you waited till the time the candle doesn't close below super trend. And what is the setting for super trend? Here I'm using 14 and 2. Simple super trend. So now let's look at the left. How many times you would have made money? Here you have gone short, you would have made this money. Here you have gone long, but you have made little money, not much. Here also sideways, no money. Here you could have made a little money, sideways. In even the sideways market, this will not work because you will be able to see that the price breaks down but doesn't go down. So this you have to be very careful. But if you see, even in sideways market, your loss will not be big. See here, if I have to show you, you've taken a short entry here, right? And the super trend has crossed immediately after here, which is right above your entry point. So your loss will not be much here. Here you have taken a long entry and the market didn't move much. It came back to your level. And this was your small loss which you booked. But look at the gain when you continue to do the same pattern. This kind of entire move can be captured. So this should excite you. And if you do this on a regular basis, your gains will be much higher. Simple system where you have captured, you got a short entry here before the market crash. And blind rule, whenever the market is going to cross the super trend, I'm going to cut this. So you have cut your trade here. This entire move you captured, and then you went long here. It gave you money till here. And if you really want to avoid even this loss, then you trail your stop loss. Trail your stop loss every day, candle by candle. Not by candle, but at least see that your entry price becomes your stop loss once the price moves above it. And this we are talking about daily candles, so definitely you can do that. You can always see that if the price is coming back to your entry point, you just exit just 1 point below your entry point. That will be a minimum loss, 1 point. That should be a fine for you, right? And when you gain this much. So, but that's the reason. The main problem is that psychology, and we all have this problem that the moment you see this on the charts back by things which have already happened, it looks so easy for you. But when you are into a trade and the candle starts fluctuating up down, and you keep looking at your MTM, then every possibility that the mind will get fooled that, oh no, just see that what will be your condition on this candle. You would have felt, oh exactly, there is an engulfing, this red bar has come, maybe next day there will be a bar like this, should I cut my trade? You'll definitely go and cut your trade here, psychologically. Because you're saying a candlestick pattern to ban gaya hai, and next day 100% it is going to cut this, let me not lose my profit, and you cut your trade and exit here. But see what happens. Market goes up further. So sometimes it is simple things which give you money. So let's go to a 15-minute time frame. 15-minute time frame also super trend works really well. but only problem is that if the sideways movement, you will not be able to make money, but that also can be trailed with a proper stop loss. Okay, so this system actually can give you a lot of money. And today let's look at the market on a 3-minute time frame. See the entry, see the move. So if you really want to buy and you have like small capital, you buy basis this on Bank Nifty. And if you really want to hedge your position and not lose anything, then do one thing. Whenever you get an entry like this, what is the strike price? 29,800. Buy a 29,800, call, okay, and then sell a call above it out of the money, which can be a 30,000 call. So you're hedging your position, you don't need to put a stop loss. This is ITM and this is OTM. So what will happen? This goes into negative territory, this goes into positive territory. The difference between the premiums of these two strikes will be a profit. The same will be your loss. I will show you this strategy on let's go to our. So today Opstra is not working, so I'm just trying to show you this on a WhatsApp web. So expiry is 10th. We will choose a strike. This is a problem with these guys. Every time there is something. So we'll go to Bank Nifty 10 December and what is the option chain telling us? Let's see if I have option chain open anywhere here. Yes, I have option chain. So option chain is saying 30,300. So assume that you get a breakout at super trend on 30,300. Then what should be your position? Okay, so we will choose 30,300 or choose a strike below that 30,200, which is in the money call you're buying. Okay, and then you are adding a 200 point away, which can be add a 30,400 call, and you're selling this. I'm just doing it on one lot. Okay, so your level 3 PNL is about 2,200. So this will show you the table till the price goes up to 30,165. Your PNL will be like positive 41 rupees until it goes to 31,715. Your price is, because this is an upside position, you're buying an in the money and selling an out of the money. So the loss will be when the price comes down below 30,200. So the moment it comes below 30,200, your loss will start taking 2186. So this is your maximum loss, 2186. Okay, there won't be any more loss bigger than that. So your loss is about 2186 and your gain is about 2814. So isn't this a good strategy if you're buying? Because here you will not lose more than what is defined here. So it's a very simple thing that we run after, keep looking at others MTM and we want to make the same kind of money, but we have to first safeguard our money. So how do you safeguard your money? If you're wanting to trade Bank Nifty, which is the most volatile of all the stocks and all the if I have to say, this is a bull, this is a wild bull. Bank Nifty is wild bull. Ones who trade on Bank Nifty, they can trade on any asset because it's like that. The moment you take an entry, it starts going down, up, down, And if you trade in futures, your stop loss will get hit very easily. And the moment you start seeing MTM going now to minus 5,000, minus 6,000, minus 8,000, obviously the psychology will tell you to cut your trade. You don't know whether it is going to reverse or not. So what do? Either we should have a system where it is very easy to tell that put a stop loss and follow that, but mind starts playing on it. So the best thing is to just have a system like this, that if the super trend gives me a bullish entry, I will take a bullish entry, but my setup will be I'll buy a call which is below this strike, and I will sell a call which is 200 point above this strike. Okay, so that your loss is limited and your profit is also limited. But that's fine. How many times you actually take the complete target? You need to ask that. It's not possible to do that. At least this way you'll be consistent, and making yourself consistent in the market is the only way where you're going to make a living out of the market. Otherwise you will be all over the place. One trade might give you money, but second trade you might lose out. So the best thing about this particular strategy is that you can apply it on a longer time frame also. If your analysis on a 15 minutes tells you that I get an entry here, I buy a call which is 29,800, then sell a call which is 30,300, and you can easily make money. See the kind of move it has given. You don't have to worry about stop loss getting hit, and no time your MTM will show you a bigger loss, because the loss is defined. You will only get to see that 2186. This is on expiry, you will see the loss. Or if the market starts moving faster in intraday, this is the loss what you will see, 2072, which is fixed, and 2500 if it is very bullish move in the intraday. So is this system not better? All the time we keep searching for setups where we can make money like instantly, 10,000, 20,000, and you will put and make like 500 quantity we buy and we make lakhs of rupees. See, it doesn't work like that. You need to develop that skill, and when I say skill, you have to train your mind to actually do that, and it is very difficult. And I'm telling you, you have to be in the right frame of mind to do all that. But these are the simple hacks and simple use of options. You can definitely become successful by using this strategy. Buy an in the money call when you're wanting to take a bullish position, and sell an out of the money call like 200 point or 300 point away. Your loss is defined, your profit is defined, and no worry about the whipsaws which happen in the market. The market can go up, down, up, down, up, down, but till the time the super trend is intact and you're moved up, you are in profit. Anytime if any sudden candle drops and breaks the super trend, even then you will get out in profit, right? So that should be your target. I hope you have understood what I said, and this is very important, guys, and this is a very good setup and strategy to trade. You don't have to worry much, and biggest problem in the market is that stop loss. Where to keep your stop loss is the biggest question everybody has. So I am saying remove that stop loss only. Trade with this kind of strategies. You don't have any tension. Your loss is fixed. Stop loss, when you keep the stop loss, you always say that, okay, my entry is at 30,000, 29,869. Let's do this. 29,869. Okay, minus what is my stop loss? My stop loss would have been here, assuming 29,656. 29,656. So that will be 213 points into 25. So this is your loss if you are keeping a stop loss, which is like reasonable stop loss basis the super trend. So you are ready to lose about 5,325. Now what happens the moment the candle comes and it shows you like 2,000, 3,000 loss in MTM, you start cutting your position. So to avoid that, this option strategy is actually, this is called as debit spread. So this option strategy is giving you a clear-cut picture that, boss, if I go wrong, my stop loss is 2000 rupees in that particular trade. That's it. You cut your trade and look out for a next trade. So you're not going to lose much. If you go right, then book 2500 and exit. Okay, so don't try to play around, adjust the strategy here. Then you will lose the edge and you will start losing money. I have gone through all this, and I'm telling you with my experience, these kind of things only will help you to save your capital, and saving your capital is the most important thing in the market. So please do think about this and always trade with options. Never buy naked call or naked put. Always hedge it. This kind of positions, if you do it on a daily time frame and carry it, it will be a super profitable thing. For example, if you have done this on a daily time frame, assuming you bought a 21,000 call and then sold a 23,000 call, then you could have easily booked profit, and expiry to expiry you could have changed your position till the super trend is broken, and you can carry it forward like that. So that's it, guys. That's it for this week. I hope you are learning something new every week, and please do share your comments. I am happy to see a lot of people are commenting and writing their questions, and I will ensure that I will reply to you and try to give you as much knowledge as possible. Thank you for watching so much, and please do subscribe and like the videos and share it with your friends who wants to learn the market. And I'm here, and let's connect next week.